Another Fed week has come and gone. Gary Wagner joins us to lead us into the weekend and tell us what's happening on the gold front. Gary, thanks for being with us.
My pleasure. My pleasure is always to be here.
So, Gary, last time we spoke was during last month's very important Fed meeting. This week they released some key minutes, which were seen as being bearish for gold. What do you make of gold's reaction to these minutes?
Well, you know, it's interesting. If you recall, it's been about, I believe, 3 weeks since I've been on, and that was just before the FOMC meeting. And I was looking for gold to move up as high as about 12.20. I think that we hit about 12.21 and then began to back off. The interesting thing is that it wasn't a new meeting. It was simply that the minutes were released. And as they looked through the minutes, they saw that it wasn't a harmonious group, so to speak. There were those that were more hawkish than dovish and those that were more dovish. And the initial perception was that they were going to move the interest rate hike out to September. And now the fact that they've got a couple of the members looking for the interest rates to possibly move up even earlier, of course, that put pressure on gold. My sense is that we have at this point really factored that into the market, the fact that we might in fact begin to hike rates earlier than initially perceived.
So gold started off the week on a positive note, breaching the 1200 level. What key levels are you looking at for gold?
Well, you know, on Thursday of this week, we broke back below 1200, and that to me is very troublesome. But I really have to see 1221 as a number taken out before I can really get bullish again on this market. My belief is that, barring the circumstances or the data that we have available now, we could see the market drift lower.
Now, Gary, let's look at the US dollar for a second, because I spoke with some analysts who suggested that even if the US dollar were to come under pressure, it wouldn't be enough to help gold's rally and to keep those numbers above 1200. Do you agree?
Yes and no. The main thing about a dollar move down is that what we have witnessed in this market over the last year is tremendous volatility in the dollar and a tremendous range. And so the way the dollar moved up was certainly a tremendous spike. And if we get that kind of spike on a correction, that weaker dollar, of course, would help gold. And so I believe that it really depends on if the dollar falls, how much it falls, and how fast it falls, because it could truly have an effect on the price of gold.
All right, on that note, let's get to your insert. What have you brought us this week?
Well, since looking for the market to go to 1221 and it backing off, I'm going to be giving our Chartist viewers my latest forecast on the market. You know, it's been almost 3 weeks since we presented our last chart this. In fact, our last chart this came out on March 20th, and at that time the market was trading roughly at 1170. You can see that with this little arrow right here. And in fact, at that time, if you recall, or if you want to, you can simply go back and view that last video. We were looking at the potential that gold had hit a bottom and that we would see this market move. And at that time, our forecast was basically looking for, the market was sitting up right around here, and we were looking for the market to track as high as, call it 1221, 1219, in that area. Now, you can see from the high that it actually hit, it did in fact come to 1221, 1223 being the high here, I believe 1221 being the high here, and we actually did issue a buy signal in the market, and our traders got long in this area, and we issued the recommendation to either trail stops up or trail stops up and put what's called an OCO order. One cancels the other at 1219. And for those that place the OCO order, they were able to get out really close to the top on this nice little rally that we experienced. And this rally itself was able to take that market substantially higher. Now, there's a couple of things that we also noted. We were looking at different candlestick patterns. We saw an engulfing bullish. We had our confirmation and then our continuation here. We also, if we kind of draw this line down, let me get it as straight as possible. Now realize that on an MACD, which is what we're looking at here, you're typically going to lag behind because it is a moving average based oscillator, but you can see that just before that you got your cross in the market somewhere in this area. That, coupled with the candlestick patterns and with the fact that we were coming off of this low here, really gave us a pretty solid indication that we were in fact looking at a potential bottom. The other thing that we were looking at was the dollar, which had been very, very strong, now coming under pressure. Well, traders, there's really been a pretty big difference that we've seen in the market since that time. And really, I believe that we could see gold actually begin to trade under pressure. Now, again, there's a couple of things that we're looking at. First of all, when we look at our candlestick pattern here, very, very similar to the candlestick pattern that we saw here, but you're getting either a incomplete or a complete dark cloud cover. Now, a dark cloud cover is a simple candlestick 2-day pattern in which it opens at, depending on whether it's a continuous contract or not, or above the prior body of the prior day, and closes at or below the midpoint. Now, in this case, it closes, I believe, just at or above the midpoint, which is why we would label it an incomplete dark cloud cover. You would not take that call, of course, unless you got a confirming candle. Following day, you actually do get your confirming candle, which is a red candle with a lower low and a lower high. You're also, if you're looking at these MACDs, which is why we're waiting for this signal really to kind of consolidate a little bit more, I'd like to see this MACD cross, and that would absolutely issue a sell signal and really indicate the potential for further decline in prices. Now, in terms of critical support levels that we're going to be looking at, we want to look at 1192 and 1182. These are Fibonacci retracements of this most recent rally here. But more importantly, what we really want to keep our eye on is the dollar. Since much of the rally in the dollar has brought about a decline in gold prices, and when you consider this is a monthly chart, so we can look at the big picture, but really even ever since the middle of June, July of 2014, we've really seen this market pretty much on a monthly basis. All green candles have a consistently higher close than the open, and we've also gotten higher highs, we've gotten higher lows pretty much across the board up until this month. Now this month, and of course this month has just started, it has actually gone back to green, because you can see by this big tail that it has, you're really looking at a candlestick that's in the umbrella group and could actually turn into what's called a hangman in terms of a candlestick pattern. But we're seeing some tremendous strength, and now we're back up at what we have pegged as our resistance level. So really what we're looking at with strength of the dollar returning, and you can absolutely see that here, with the equities markets again flirting with these record tops. Of course, these record tops are up here at around 2100 plus. We're at 2086, but you can see that it has come off of this 2046 support level and moved back up. Our current resistance is right in this area, but we could see the equities markets move back higher. Higher equities, higher dollar, we could absolutely see gold move back under pressure. Now, where it can go is something that we'll be talking about next week on Chart This, and of course all next week on our daily video review and report, the gold forecast. For those of you who are not premium members, I invite you to go to our site, thegoldforecast.com. On the front page, you will see a button that allows you to sign up for our mailing list. When you do sign up for our mailing list, we will send you out a coupon that will allow you to get your first month at 50% off. You can always get a free trial, 7-day free trial, but this will allow you to have a substantial discount on your first month. Again, go to our website. There will be a button on the first page. Again, gold under pressure and my current forecast.
Thanks so much for that, Gary.
My pleasure, and I want to wish all of our Chart This viewers a great weekend and prosperous investing and trading next week.
And thanks for watching this edition of Chart This. We'll be back next week. We wish you a wonderful weekend. Thanks for watching.